Will McIntosh, and I am CEO of a new consulting firm called Arcbridge Research Group. Today I talked about the logistics at the AFIRE meeting in New York. What's surprising about this sector is everyone is thinking today that the vacancy rates are higher, and they are, and that rent growth has slowed, and it's actually flat in a lot of markets, and they're worried that lease up is slowed significantly. Investors need to understand that it's got to take it a market at a time, a submarket at a time. And when you break it out, there are some markets that are absolutely doing extremely well and experiencing rent growth and investment opportunities that represents a lot of demand and very low supply. It's a very much of a bifurcated market, meaning that you've got smaller buildings with its own set of demand characteristics, more urban infill, and there's a lot of demand for that, serving local businesses, and even Amazon, that as they're trying to get that last mile in, those smaller buildings are very attractive to them. And then there's everything all the way up to what I call the big bulk warehouses, over 1 million square feet. And there's some markets today that are undersupplied for those. And when a big user like Amazon comes back into the market and they're looking for a significant amount of square footage, in some markets there's just nothing there for them. And there's a real opportunity to develop and provide that space. And I would say to investors that if they're looking to invest with managers that are specializing in that space, make sure that they have a great asset management team that can take care of those assets during times when the markets are a little slower and still create value. Be careful that you understand the demand drivers that are driving these markets, and to focus on markets where there's clear undersupply and still very strong demand. A lot of people have been gravitating to the Sun Belt, when in fact warehouse investment is predicated in part on the path of goods movement, which are going through cities like Memphis and Chicago and central Pennsylvania. They are tremendous locations for industrial warehouse property. Looking for 1 million square feet in Chicago, good luck finding it, because it's just not there. Certainly one of the things that's driving demand for industrial warehouse is onshoring and nearshoring. And more companies are moving back and they're looking for locations. They're primarily focused in technology. It's certain critical industries that the government is concerned about and wants to make sure that we bring those businesses back home. It's not overbuilt everywhere, all right? Some markets are overbuilt. You got to take it a market at a time. And there's a huge amount of new demand that's about to come to market from a large user that's going to be looking to take down more space. And I would say the third thing is, whatever you do, make sure you understand market by market what the opportunity is, and even down to the submarket level. Unfortunately, particularly core real estate capital have pulled back from investing in industrial. Part of the reason is they feel they're over allocated, but they're also worried they're seeing these national average reports that are reporting data that suggests that the market has slowed, when in fact, if you look in the right markets, in certain markets, the opportunity is tremendous.